Hello, Chairman Pascrell, Ranking Member Kelly, and members of the Oversight Committee and staff. This is a YouTube version of our comments on the hearing on the Pandora Papers and Hidden Wealth from December 8th, which is today I'm recording this. So no one was very much surprised at what was revealed in the Pandora Papers. Although going over the details, I'm sure will be great fun. The excesses of the rich and proud need to be laid bare occasionally. The challenge, however, is to craft ways to move beyond a world where the super wealthy can accumulate fantastic wealth. The more important portion of the task is to strip the wealthy of few of the power they have over workers, voters, and elected officials. Earlier this year, we submitted comments to the Special Revenue Measures Subcommittee on how the tax code treats the wealthy. A portion of these comments is attached, and there will be a separate video on them. They emphasize who the wealthy buy rather than just what, the valuation of unrealized income, and why a wealth tax falls short. The main reasons for the latter are that the wealthy find ways to spread the burden of such taxation elsewhere. While it is impossible to squeeze more out of low-wage workers, there are plenty of things the wealthy can do to transfer their obligations. That is the point of today's hearing, that they always seem to have some money. As members and staff know, our go-to solution for economic justice is tax reform. The latest iteration of our plan is attached, and there will be a link to a video that explains those changes. The bones are the same, but the proposed rates and brackets have been adjusted to reflect recent compromises, which will pay for us to build back better. Our approach is to shift most taxation to transactions rather than people and corporations. This includes consumption, vehicles for distributing tax benefits for families, shifting debt holding to tax prepayment by the very wealthy, improving retirement equity by equal dollar funding of the employer contribution to Social Security, taxing asset gains and returns on a transaction basis rather than the end of the year results for each investor and company, and expanding the benefits of transferring wealth from the investment sector to the employee ownership sector. Most important, until employee ownership becomes a viable replacement for capitalism, human resources will be human assets. Such assets are more precious, but are not treated as such by those hiding in Pandora's box. Let me also emphasize that corporate taxes, income taxes as such, will go away. Employers will pay, but the form of employment will not matter. So on the investor side, asset value-added taxes do not care where the assets are parked, just when and how they are sold. When the wealthy sell financial assets to each other or try to unload junk onto retirement funds and small investors, a tax should be paid. The tax should be high enough to stop the junk flowing into the system and to give heirs an incentive to sell out to workers rather than arranging for mergers and acquisitions when they are done with them. Many critics of the value-added tax, some of whom are well-funded, cite their regressivity, but adequate family income is provided through the tax benefits to employers or government subsidies when those benefits are unused. The wealthy will find that, like buying investments burdened by an asset value-added tax, buying luxury goods can be expensive. Again, a value-added tax on most people can be taken care of with not just a prebate, but an adequate payment, an adequate child tax credit, which is what Build Back Better has. Well, it's not adequate, but it's a step in the right direction. It should be high enough so that it can provide a median income level of existence. A median working, which is still working class, but it's better than what we're giving now. It is impossible to dodge value-added taxes in the same way that life insurance, retirement, especially Roth IRAs, and loans against liquid assets when everything these funds buy is taxed between rates of 13% and 28.8%. This is more revenue than a wealth tax will ever provide. Pandora has shown us that international cooperation is needed to collect such taxes and repatriate the funds to both countries of purchase and countries of residence. So if you buy a yacht in Marseille, if you're an American, the French will tell you, oh, yeah, there was a VAT paid. And, they took the asset out, so they'll pay it to you, or they'll pay some to us, and they'll pay some to you. There is no crisis, however, if the idle rich spend more money on a painted canvas of no intrinsic value, if such purchases mean the emancipation of workers from authoritarian capitalism to self-ownership. Note well, there is no such thing as free market capitalism. Capitalism implies obedience, not a free market. When you go to work, you do what you're told, or you're gone. That's not the case with employee ownership. Thank you for the opportunity to address this committee. We will be attaching a link to this video to our submission. Thank you.